Got in this video Sunday the 11th of August 2013. Hope you had a good week's trading. Hope you're enjoying your weekend, and I think next week's going to be really fun. There's going to be fireworks. We've got currencies breaking out all over the place, and the equities are sitting on an absolute ledge. So we've had decent range, decent volume over the last few days, which is nice. We've kind of come out of this summer doldrums period where the volumes were really light, the ranges were really narrow. We did 1.5 million contracts traded on Friday, which is decent, and compared to the last couple of weeks, and the range was decent as well. Remember, range kind of goes through cycles where it kind of compresses and expands and compresses, and because we had this summer doldrums kind of area here, I think we're going to go through some bigger range type days, so look for those. And on Thursday's video I said this pattern during the middle of the day was very unusual. All these blue professional bars kind of getting short as we were going back up through the 90s. You could see it really well on the 13,500 tip bar chart here. So this is Thursday's activity, this is Friday's activity. Very unusual to get, we had 5 in a row kind of there. As the market kind of pushed back up, that was professionals with resting sell orders, high average trade size, just getting short into that move. And now we've had a resolution of that kind of area, so we know that didn't break to the upside. That wasn't them kind of getting ready to push it back up. They were getting short because we kind of moved down. And what was good was, overnight we had a sell-off through 1690, which I said was kind of a critical level. We kind of headed off on the downside, and then they ramped it back up during the open. Same thing happened. Blue professional bars kind of came in. It was a flush buying pattern here, so flushing out the last of the buyers right back up to cyclical resistance in the 90s here, bang, and it kind of sold off. And again, my friend, on the 1500 tip bar chart, this one, wait for the full liquidity of the day. It's not a set in stone type rule, but it's a good rule of thumb. 3 out of 4 times, when they want to reverse it during the day, they'll wait for the full liquidity of the day to get positioned and look for exhaustion patterns. So overnight you can see that was where we broke through the 90s here, but they ramped it up, kept that ramp going after the open till we'd had an exhaustion pattern showing that there was a lot of volume kind of going through. We had blue professional bars getting short on that rise up, and then a little bit of a test back up. Amateur bars right at the high here getting wrong footed, bearish divergence kind of comes in, bang, and there's the rush for the doors. That's the exhaustion selling getting this move going, and then it kind of keeps on going. Now, bit unusual today on Friday's activity, because we got into the 80s down here with a decent move down. 2 blue professional bars kind of come in, and we had a rally back for 10 points, bang, bottom to top here, 10-point range. Now, I don't have an explanation for this necessarily. It wasn't an exhaustion pattern on the 1500 tip bar chart, kind of here. It was just a flush pattern. It was fairly decent selling, but on the 45 you can see it wasn't much. They just chose to kind of step in and push it back up. We've had a lot of this over the last weeks and months where it's the midday kind of rally. Someone steps in, not necessarily kind of the spark money. Someone kind of steps in and says, no, if we break through these levels, these levels are absolutely key, kind of here, down at 82s. We bounced off it before, we've come back again. If on Friday's activity we kind of sliced through there, it would have just kept on going to the downside, and it would have been a really, really nasty day. So, I don't know. Someone steps in and says, no, we're not going to go through 82s. It wasn't as if there was exhaustion kind of selling there. The move, I don't think, is over to the downside. We did move back up into an exhaustion pattern. It's rolled over. This was nasty into the close. A lot of people just getting out at the end of the day, end of the week. And we're back down to this ledge kind of area here. So let me show you the 40,500 tip bar chart here. So this is this ledge just above 82, kind of 82, 84 kind of area. And as I say, we haven't seen the downside move. We haven't seen the exhaustion selling on the downside. So, it was a weak rally back up. We've been trying, we've had these exhaustion patterns into these 90s, once or twice. This was the really weak one here. The bearish divergent signals come in at 1700. We've had the first sign of weakness, which is a break below support. We came back up to this resistance, which is actually triple resistance on all these high time frames. We got rejected there. This move back up, we ended up being an exhaustion pattern, last roll of the dice type stuff, and now we're sitting on this ledge at 1682, 1680. So, because we've not seen the exhaustion pattern on the downside, I think that we're going to slice through that. Sunday night into Monday. I'd have thought we've been trying and trying. They've been trying to move it back up through 1700. It's not worked. They've run out of puff. They've had this kind of move back up during Fridays, kind of kept the numbers fairly decent. So look for that break of 1682, 1680. Could be exciting. On the bigger picture, TRYN oscillator again is not oversold yet. We're at minus 37, kind of down here. I suppose it's a little bit odd for me that the TRYN reading was plus 38, showing net kind of buying going on there. Kind of a little bit strange there. I would have thought there'd been inherent weakness within Friday's kind of activity, and that would have been more like a 0 type reading or a little bit negative reading. So, and that because that hasn't kind of fully exhausted on the way down or turned. I still think we've got some moves on the downside. We've got this cluster of sell orders kind of in that are waiting for that kind of exhaustion pattern and reversal in order to take profits. So let's see. And another one, let me show you this average trade size. Again, this isn't average per am, totally different algorithm, but it's just showing the professionals and the amateur bars. And the last ramp that we had up here into the 1680s, you can see all the blue professional bars kind of getting short on the way down, and then the last move up into the 1700 here, blue professional up bars. Let me just zero in on this. So on these up days, high average trade size. This last one on Thursday was high average trade size, and we're kind of coming back down. So it's interesting, this one on the flip side doesn't kind of show bottoms with blue professional bars kind of stepping in at the bottom. As I said, it is a different algorithm from Better Pro-Am. Better Pro-Am does show you those kind of exhaustion patterns and professional bars kind of coming in at the lows. This one doesn't, but it does show you these kind of ramp ups that are kind of used by the professionals to get out, and then the weakness is all kind of amateur bars and low average trade size stuff. So I'll just be interested to see where it goes. The other thing that's happening is currencies, and I think I've been flagging this pretty well over the last couple of weeks, just saying there's going to be some kind of move in currencies. And this one is pretty important. This is the carry trade. Did the video a couple of weekends ago about the carry trade and the yen. Let's just compress this back up. So we got two things on here. We got the SPY and we got FXY, which are the two ETFs, exchange traded funds for the equities and the yen. And you can see here when the yen is weak, equities kind of go up. So we had strength in the yen kind of topped out up here at 130, and we had the equities kind of fall off. As soon as the yen starts to weaken, the equities are allowed to strengthen, because the money can flow into the carry trade. When the yen is weakening, they're making money not just on the the risk assets they're buying, they're making money on the currency, and the interest rates are low. But now we've had a really big move in the yen on the way down, which has kind of bottomed out with an exhaustion, well, not an exhaustion pattern, but an overbought level reading here in the oscillator, looking at the difference between the two. And we cracked on through the zero line over this last week, and the yen is starting to strengthen, and so the equities markets could be weakening. And what's interesting for me is on all of the currencies, they're all breaking out to the upside. So you got the Aussie dollar continued its strength into almost 92 on the futures contract here. So beautiful pullback to end of trend with a flush pattern. Blue professional bars kind of come in here, bang, and we've raced all the way back up from 88. So it was beautifully signaled there. But if I roll through these currency charts, they're all breaking to the upside. So we're above resistance, breaking into an uptrend on the euro here. Okay, Friday's activity was a little bit of an amateur down bar, but that's just testing down. I would look for this to break to the upside through 34 whenever that happens, Monday, Tuesday, Wednesday. But that's kind of we're breaking into an uptrend because we're above resistance here on euro. Japanese yen, same thing. We're above resistance, breaking into an uptrend, having done all the damage on the downside, having put in the exhaustion patterns, the flush patterns, the bullish divergence right on the zero line, showing the weakness of the selling going on here. We're breaking into an uptrend here. Canadian dollar, we're above resistance, breaking into an uptrend. Talked about this on Thursday's videos, saying this one has finally kind of caught up. Canadian dollar. British pound, we're through resistance with this blue professional bar, jump in the creek. We're kind of waiting to get up. Again, same thing, we've done damage on the downside, exhaustion, bullish divergence, flush patterns right here at the lows. The blue professional bar is kind of picking it up at the lows here. Now they're anxious to get on board, a breakout above resistance here, going on the way up. And the converse, the reverse of this is dollar index falling through support here. Now, if you look at the next highest time frame, which is the weekly chart, sometimes those breaks get caught by a cyclical resistance coming in on a higher time frame. Well, that's not happening on the weekly charts. I won't bore you roll through the weekly charts, but it's not there. The weekly chart is kind of supporting this breakout. So I actually think the currency is going to be really interesting over the next week or two, because we've got these kind of breakouts happening on all these time frames. The last chart I'm going to show you is euro. Euro on the commitment of traders. And the euro doesn't look particularly strong at the moment for that kind of break, and it's not moved a great deal so far. But if you look at the commitment of traders, kind of setting up for a little bit of a pop. Now this is just the reverse commitment of traders numbers, looking at the professionals, kind of reversed long for short. I find this the most useful way to look at this, and this little divergence pattern is just showing the difference between what's actually happening in the euro versus the commitment of traders. And you can see, we get divergence patterns at highs and lows and highs and lows and highs and lows. We've had this little pattern kind of set up here, bang bang bang, they come back to a neutral position in terms of what the professionals are doing, and we got this kind of supporting this on the weekly chart. Monthly chart, same thing, same kind of divergence pattern that shows you highs and lows, lows and highs, and this low here is a bullish divergence. So I think what could happen in the euro this week is quite interesting, and I think all of the currencies are doing these kind of breakout moves at the moment. So next couple of weeks could be really, really interesting in the currencies, and because we're sitting on that ledge with equities and the yen starting to strengthen, short covering rally potentially in the yen. Anyway, so trade well next week, head down and just take the signals when they appear. That's what I'm going to be doing. So I hope your trading is going well.